If you are a Catholic investor, the standard Boglehead advice has a major flaw. They tell you to buy the whole haystack, to buy the entire market. It's smart math, but it's a moral minefield for some investors. Buying the entire market means you at least indirectly own companies involved in adult entertainment, life ethics violations, and controversial weapons. Technically, according to moral theology, this can be okay because you are owning the ETFs. It's firms like Vanguard, Fidelity, or Schwab who make the decision to own shares in the companies themselves. Still, you are indirectly funding the things you pray against. For many, their conscience compels them to seek out ETFs from firms that will advocate for positive change to the way things are. So, how do you get the passive returns of a Boglehead portfolio without compromising your conscience? We're going to replicate the legendary three fund portfolio using funds that align with the U.S. Conference of Catholic Bishops guidelines. Here's the split: 60% CATH for US stocks, 20% CEFA for international stocks, and 20% VGLT for safe haven bonds. This can be adjusted based on your risk tolerance, of course, but let's break down why the basic mix works. Your domestic growth engine is CATH. This is the Global X S&P 500 Catholic Values ETF. This fund tracks the S&P 500 but filters out the bad actors. It removes companies that violate the church's guidelines on human dignity and life. The expense ratio is 0.29%. You get the returns of the American economy, but you aren't profiting from industries you morally oppose. Now, I'm of the persuasion that a true Boglehead should never bet only on America, though. So, I would personally put 20% in CEFA. Again, not financial advice. This CEFA ETF is the S&P Catholic Values Developed ex-US ETF. It gives you exposure to major companies in Europe and Asia applying those same moral screens. The expense ratio is 0.35%, covering your international base. Now, this is where the Catholic three fund Boglehead approach deviates from standard advice. Most people buy total bond funds, but that may not be the best way to go for a Catholic Boglehead approach. Instead, you could hold 20% in VGLT, the Vanguard Long Term US Treasury ETF. There are two reasons for this. First is corporate complicity. If you buy a corporate bond fund, you are indirectly lending money to corporations. Even if you screen your stocks, a total bond fund forces you to lend cash to companies violating your values. Second is usury. Total bond funds often include credit card debt and subprime loans. We want to avoid profiting from high interest debt that crushes the poor. By using VGLT, you are holding US government debt. You are funding the sovereign, not predatory consumer lending. Financially, it's a powerhouse. The cost is only 0.03% basis points, and the long-term treasuries are historically a better hedge against stock market crashes than corporate bonds. This is the Boglehead 3-fund Catholic portfolio. Low cost, broad diversification, no moral compromise. You don't have to choose between retiring with dignity and retiring with a clean conscience. If you found this video helpful, please like and subscribe, and let's keep the momentum going.